Love these Know Your Dough segments brought to you by the Tennessee Valley Federal Credit Union. And love it when Brian Fryer is here, because if you are in the market for a mortgage, he is going to be kind of your guy, right? You're the mortgage loan...
I'm the mortgage sales manager at
Mortgage
TVFCU.
sales manager. So often you've been on talking about that, and we will a little bit. We'll talk car loans. I want to begin, though, by talking about these CD rates. How exciting is that to see those going up for people?
Yeah, that's something we haven't seen in many years. Deposit rates and CD rates have gone up. Of course, Federal Reserve has increased rates, which have increased car loan rates, mortgage rates, rates across the board, home equity lines of credit, but also your deposit rates have gone up. So for depositors, people looking for more bang for their buck on their money that's deposited, CDs are a good way to make a little extra.
Well, you know, I think it can be very easy to forget the balance of those scales with
Yes.
interest rates, because it is hard if you're a consumer looking to make a purchase. Sure,
Yeah.
it is hard to see those rates go up.
Yeah.
But if you are a retiree or you're building your wealth and you've got some decent sized monies to invest, CDs are a great option, and they're a safe option.
Yeah, they are. They are.
Guaranteed.
Your money's guaranteed, and you can put in a CD 6 months up to 60 months, any term in between. Rates right now that we have around 4.9%, right below 5%. So it's good return, and it's it's a good option. It's safe. It's going to be there, and you can still access if you need to. There might be a small penalty if you pull it out early, if you pull the money out early. But yeah, you can put in as little time as 6 months, 12 months, 18 months, all the way up to 60.
So staying with those for a minute, if you chose the 60-month rate length of time, are you going to get a higher interest rate or a lower?
Generally, the longer you put your money in, the higher it's going to be.
The higher.
Yeah,
So that's a great thing then, to take
Yep.
advantage of that higher offering, knowing that you can still access it if there's an emergency situation.
Exactly.
Is that kind of the criteria?
Kind of the way, and you can also look at money market accounts too. That's another option. You can pull money out, a certain amount per month you can take out, or if you want to just do in a regular savings or share account, as we call them at the credit union.
Okay, so now let's balance that scale back the other way for the consumers out there looking to either get the mortgage or they're looking to buy a car.
Yeah.
They're thinking, great, Julie, I'm not so happy that those interest rates have gone up, but y'all see that on the credit union side too.
We have. I mean, we've seen rates about a year and a half ago. You had about your new car rate was about 1.99%. Right now, you're looking at about 5.99. But historically, that's still a good rate if we go back past 30, 40 years of what rates have been.
Right.
We just had a lot of low rates the past, especially the past 3 years, but the past 10 to 15 years we've had low rates.
So when you're mentioning that 5.99%, that's if your credit's good.
That's your credit good. It can go up there tiered on your credit. Also can be the type of collateral that you're purchasing. So if it's a mobile home or an RV or something like that, or a boat or a motorcycle, rates could change based on that. And that's the same with a mortgage too. It's going to depend. Like right now, your 30-year fix is hovering around 7%, 7.25%. But it could change depending on the type of property that you buy. It could be a manufactured home, could be a condominium. Also, it's going to be tiered on your credit too. So there are a lot of factors that go into the mortgage rates.
Well, so the reason I mentioned that about credit is you were here not long ago, and we were talking a little bit about your credit score and kind of the magic formula for having a good one. And one of the things that y'all offer at the credit union are those like a secured
Yeah, it's called a share secured loan. So a share is basically, it's a savings account. We call them shares at credit unions. But you can put your money in that savings account, that share account, and borrow against it. Interest rate's very low. It's usually 2% above whatever that deposit rate is paying. So right now those are paying 0.3% if I'm not, I think that's correct. So about 2.3%, you borrow against your own money. And people ask, well, why would you want to borrow against your own money? Well, we report to the credit bureaus, so that could establish what we call lines of credit. I recommend at least 14 months, if not more, to establish that credit, that trade line on your credit to help your credit scores. It's a really great thing to do, especially for younger folks.
Right. So what that means, though, is with, to me anyway, you can tell me if I'm right or wrong. I could very well be wrong. But with these interest rates being a little bit higher than what we've seen recently, and your credit might be not the best, well, you want to get the best credit, best interest rate now you can get. So if you can borrow some time and build that credit, you'll reap the benefits of it.
Yeah, that's another thing. And right now may not be the time for someone to purchase something, and they have time. So time is on your side sometimes. So you may want to work on that credit. Doing a share secured loan is a great way to do that. And also, if you have outstanding credit right now, make sure you're paying it on time. and not incurring any late fees. Definitely don't want to go over 30 days late or anything like that. That can hurt your credit.
I do not want to open up a bad can of worms, so if I'm barking up the wrong tree, you can just stop me. But from a national perspective, not here in town, but from a national perspective, there's a lot of conversation about the banking industry, and we've seen some things. Again, y'all are a shareholder owned, and you as the member of the credit union are a shareholder essentially, right? So there's security in your money.
Correct. Credit unions, especially TVFCU, we're owned by our members. We don't have shareholders. We don't have to pay anybody our profits or anything like that. We're owned by our members. I'm a member. I'm an owner as well. I think we have a little over 180,000 members right now. So any money that we make, we put back into the community and put back in the credit union, and also pay higher dividends on our deposits, and plus lower rates too. If you want to take out a car loan or a mortgage loan or anything like that, we can offer much more competitive than some of our other competitors out there.
Okay, so here's how you find them. It's TVFCU.com. That's their website. Where it says 7 a.m. to 7 p.m., that really is because they have these interactive tellers. And you can go to any of their locations in those hours and make your deposits and withdrawals. From in terms of inside the bank, you want to go in during normal banking hours.
During normal hours, generally it's 9 to 5 Monday through Friday, or Monday through Thursday, and 9 to 6 on Fridays.
But you can also do everything online, so you can apply for a loan online.
You can, and you had mentioned the TVFCU.com. We have a thing called live stream. You can actually pull up you can get an app on your phone or a mobile device, and you can talk to someone on a screen, and they can assist you not only with your deposits or anything like that. If you need to move money, you can also talk to someone about a car loan, a boat loan, an airplane loan, a consumer loan, or a mortgage. We have my mortgage staff. We're available on live stream as well.
Excellent. Brian, thank you so much.
Thank you.
We're back after this.